Who here is excited for opportunity? Raise your hand. Yay! That's what I love, a room full of excited people. So shall we start with some good news? Yes. We like good news. Inflation's still outside of the UK's control. We can't control Ukraine. We can't control the energy prices offshore. We can't control the oil prices, and we can't control what's happening in the Red Sea. But inflation is down. I did predict that. But inflation's going back up. And how do I know that? Well, I prepared for you a little graph here. And on all of tonight's graphs, I've marked where the 2008-9 financial crisis was, just to give us an anchor point so we can see what's happening. Now, I've gone back 35 years of data. And as we can see, the peak, for those who can see the laser, up here is above anything in the last 35 years. Therefore, do you think the peaks of the other 35 years and the troughs that follows might give us some clues about what's going to happen? Yeah? Excellent. Well, here is my prediction where inflation is going to be. It's going to continue to rise for about 3 to 4 months before it starts to sink. And by December 2027, it'll be at 3.5%. Now, if you look where that 3.5% is, it's roughly the average of the last 35 years. So I'm reasonably certain with that, and I'm reasonably certain, provided we don't get another Ukraine war or another Red Sea happening, I'm reasonably confident 3.5% is where we will hit. Interest rates, another big thing. Now, let's have a think. Inflation tends to drive what happens on our interest rates. Now, we know that the interest rates are not controlling inflation because the inflationary factors are out of our control. We also know it's not affecting rents because rents are rising faster than they've ever risen, and I'll demonstrate this in a minute. We also know landlords are exiting the market at the fastest rate they have done in years. We also know property prices are falling, which gives us great opportunities to buy. And we know that the new build developers have stopped building, which gives us opportunity to create our own in the smaller dwellings side. And we also know the lenders are lying to us because they're telling us there's really, really cheap mortgage deals out there. But actually, it applies to such a small percentage of the population. The latest deals that are quoting 4%, they only apply to people with a 50% or below loan to value and lots of other criterion. So only a handful of people qualify for these. So, interest rates. Let's take a look back as far as I can go here. So we're back into the 1970s. So we can see the trough that we had between 2008 and 2022 was an anomaly in the last window of time. And we're currently sitting at 5.25%. So who here thinks we decide what our interest rates are? Raise your hand if you think we decide, i.e. the country. Oh, somebody else decides for us? The Americans decide for us. And then the Europeans who make their interest rate move after us. And then the Japanese. And then we fall in line with the rest of them. So what we know is the Fed have said they plan to cut interest rates from the summer. So all of these pundits that I keep seeing in the press going, oh, interest rates are going to fall, and they're going to fall as soon as February and March. No, they're not. I'm convinced they're not, because if we step out of line with all the other nations, that affects our balance of payments. That affects our trade with other nations. So we will follow what the Americans are doing. And they've said it's going to be the summer before they make their first move, and we will follow shortly afterwards. And I've demonstrated this in my previous talks with how we mirror and match the Americans. So the cuts are going to be slow and they're going to be gradual. So let's go back and look at inflation. And I've produced a lot of compiled graphs here where I'm mapping lots of information on top of each other throughout tonight. And if we map interest rates on, we can see where inflation spikes, a couple of months afterwards, interest rates spike. When inflation falls, interest rates follow, but behind. If you follow each of those peaks and each of those troughs, they mirror each other.
Do you want to win at property investing? Then you want to surround yourself and learn from award-winning property investors.
Join us on the 7th of February at the Baker Street Property Meet. It's a Wednesday and we have new young property investor of the year, Emma Fielding.
And of course we've got Mo Liddell, and he is an investor in London. He won New Investor of the Year. He beat hundreds of nominees to win that coveted title.
So if you want to learn what to do and you're new in property, then join us at the Baker Street Property Meet Wednesday, 7th of February, where Ranjan and I will be sharing with you exactly our top tips as well.
And of course, it's the ultimate in networking. 300 property investors meeting at the UK's #1 and largest property investors networking meeting, Central London. See you there, 7th of February. Get your tickets at bakerstreetpropertymeet.com.
Should we map something else on there? House prices. Now that would be interesting. This is the house price index movement year on year. So this is whether the house prices are going up or coming down. And what we're seeing here is the green peaks of the house prices mirroring and matching the inflation and the interest rates. So we know with reasonable certainty that what is happening in one area ripples through into those other metrics. Now, would anybody like to know my forecast for where interest rates are going to be December 2027? Yes. Oh, all right, I'll skip that slide. Would anybody like to know? Yes. Thank you. 3.5%, the same as inflation. And I can say that with reasonable certainty, tracking all of the data through as I have done. And this has been a comprehensive exercise to produce this for you. So I've just said property prices follow inflation, they follow interest rates. I've demonstrated to you last year that it's a buyer's market. In June, I showed you the colour of the nation and how it changed. I showed you that prices were flat. I demonstrated to you the inflation figures you were being led to believe were the correct ones in the press were actually wrong. So, do you want to know more about property prices?
Yes.
Well, we'll do legislation first. You happy? Yeah, I thought you would be. Well, let's take a look at legislation and how it affects property investors first, because this then leads into pricing. HMOs, good news. Council tax banding by the room is being abolished. So we now get a single council tax band for the whole building. EPCs, scrapped or deferred, shall we say, for the minimum EPC standard of C. Section 21, it's got a stay of execution until we've beefed up the legal system to handle the number of cases that will transfer through it. In other words, probably never. New PD changes that were announced at the end of last year are creating massive new opportunities. Who here saw the new National Planning Policy Framework in December 2023? 1, 2, 3, 4. 4 people in the room. Great reading. About 120 pages of sleep deprivation, I think that was. But the bottom line is, it's creating new opportunities. If you put a planning application in, the councils have 12 weeks when this goes live to make a decision. There are conditions on that, and provided you satisfy all the conditions, so it's becoming a bit like permitted development, provided you satisfy all the conditions, if the council failed to tell you you haven't got planning permission, you get it by deemed consent. Is that good? That's a great opportunity. I expected more excitement than that. Changes to private finance came in a coming next week, January 2024. Now that is great for those who borrow money. So pay attention to those rule changes. And the leasehold reforms were changed at the end of last year as well. So again, there's lots of good news here for us as landlords to start jumping up and down about. Because all this legislation that these landlords leaving the market are saying is harrowing, slowing down their business, this is good news for you because it's all scrapped at the moment. So, a heat map. I love my little graphs and heat maps and charts. Here we can tell it's like Narnia. It's almost frozen over the UK. There's just South Wales and the northeast of England that are holding us out of the frost. So we're doing really well. Ranjan, we're changing our investment strategy. Hey, Mr. Bowser, stop cheering. Who here remembers July 23 when I shared with you the heat map of the UK, where over the course of a year, it transferred from a red-hot buyer's market to a cooling market? Who would like to know what it was like in December 2023? Does anybody want to know? Thank you. Well, I was going to say, I was going to share it, but half the room. I predicted it was going to get colder. Does it look colder? It absolutely does. So we're going more and more blue. More and more blue means buyer's market. What are we? We're investors. What do? We buy. Happy? Good news. Do you want to know how I work out it's a buyer's market or not? Yes. Do you want the secret formula? Yes. Photograph that one. There you go. I'll leave that up for a second. What we've got here is go to Rightmove, Zoopla, or whichever your favourite portal is on the market, whatever it be. Get the analytics for the total number of sold properties in your search area. Sold properties. Divide that by the total properties for sale in that area. If it is less than 30%, it's a buyer's market. If it's 30 to 40%, it's a neutral market. If it's more than 40%, it's a seller's market. This is a global formula used globally. I've not made it up. It's a global formula for you to follow. You probably all got this one under wraps anyway, haven't you? Yeah? Who's using this one already? 2 people, yeah. So, average house prices. As we can see, there's an upward trajectory. That's in cash terms. Cash terms, dollar, you pay out your pocket today, or pound sterling if you're English. Property price forecast. We've all seen the pundits coming out and putting their stake in the ground where a property price is going to be. They range from minus 5% to plus 5%. It's not much of a range, is it? Now, when we look at the government, they're going minus 5%. We could look at Savills, JLL, Knight Frank, 4% down, reduction in prices. Pantheon Macroeconomics are predicting a 5% upswing. Where do you think prices are going to go? This is your audience participation bit. Do you think, raise your hand if you think it's going to go down 5% or more. Okay. Between 2 and 5% reduction in prices. Okay. Prices are going to be flatline. Okay. And who thinks prices are going to rise next year at all? Okay. Interesting. So the room is pretty divided fairly equally between all of those categories. So out of 300 people, who would like to know what I think, based on my analysis, where it's going to be? Yes. I'm not telling you yet. You have to wait. So we've got the average house price adjusted for inflation. You know this thing I've been talking about, inflation? Well, this is house prices adjusted for inflation. So before I was showing 334,000 as your average, as the average house price. Adjusted for inflation, we're looking about 250,000. So that 10.9% inflation last year has eroded the value of those houses in real terms. Let's just chuck interest rates onto this and mirror and map to see if there's a trend and a correlation here. There seems to be a trend of peaks and troughs again, doesn't there? Coming through, which is telling us what might be happening. Do you think I could ever put rents against this and see how rents track on this graph? Would that be useful information? Yeah? Really useful information? Excellent. Well, there is the price of a property to the rent being achieved ratio, the pink line at the top. Now, the pink line surprisingly tracks the majority of the time the property prices. There are a couple of exceptions to that, and the big notable exception is right now. Now, when that is above, when the pink line is above the blue line, that is telling us, as landlords, we are making super-duper extra profit, to put it in layman's terms. So that gap is widening at the moment. Now, the little red blip at the end is my forecast for house prices, which is they're going to be flatline through 2024. And then they will do what I call a hockey stick graph, where it starts shooting upwards. Now, if we look where interest rates have risen sharply and then fell, I'm following the trend line here of all previous occurrences of this. And I believe it'll be flatline this year. And it'll be flatline for quite a number of reasons, but we can cover that later. And just to make a little bit of fun here, I've added a couple of extra marker points in. So we can see when interest rates were roughly last at the same point, the black line going vertical is showing when the interest rates were at the same point. We can look at the margin that is there for landlords on renting against property prices. We can also look at property prices in real inflation-adjusted terms. And then when we look at today, we can see that prices of properties are cheaper in real terms, having taken account of inflation. And we can also see that the rental margin is at the widest it's ever been. So rents are rising. Why are they rising? We've got lower stock levels. The Section 21 is having a stay of execution. The EPCs I've mentioned, again, has been deferred. Licensing, there's no new changes predicted to licensing to happen. Taxation, everybody's pretty much dealt with their Section 24 landlord taxation. If you are not an incorporated landlord business, then that is something to seriously consider at this point. Virtually everybody I know is buying in companies. Interest rates, they're going to flatline before falling slightly over 3 years. And yields are also in our favour. So before I go on and show you the boring technical graphs on rents, shall we do technology? Yeah. We've got software advancements for site finding. AI is proving such a bonus at the moment. It really is driving the marketplace and changing the marketplace. We've got developers' tools as well coming into the marketplace aplenty. New building materials, heating systems, hot water systems, roof tiles. Yeah, roof tiles. There's innovation there in the roof tiles, believe it or not. Modular housing? No, I think that's still never going to succeed. It's going to be a slow burn, and because of issues that Ranjan and I covered in a video in December, it's not going to take off and fly. And portals, with co-stars taking over on the market, and if those of you who are following what's happening with Rightmove is now going, share price dropping, we're being threatened. That monopoly has been broken. So there's going to be a lot of innovation coming in that marketplace, which is to the benefit of us. You guys, absolutely. So let's get on to some interesting graphs again. Price to rent ratio. We've got that graph here, which I mapped onto interest rates and house prices adjusted for inflation. And what that is telling us is, over the years, rents as a percentage of the price of the property are growing. So we are making larger margins as landlords. It's up to us to keep it in our pocket by keeping the tax there, by not spending out on the bills, and running an efficient business. Here is an interesting graph. When we consider Narnia from the previous graph, what we have here is the rent price changes. Central London up 9.5%. And then we see the regions cooling. And it's only when we're in North Wales that we actually see price reductions in rent. Now that is interesting, because it's almost like somebody's dropped a stone in the pond and it's rippling out, and you can see that ripple effect of the heat map. So if we go back to here, and I've mapped the 2008-9 financial crisis on, my prediction is rents for this year are going to be reasonably stable. Some areas will benefit with slight uplifts, some will soften a little bit, but it'll be reasonably flatline this year before starting to take an upward trajectory again. How can I predict that? Well, let's have a look at new landlord instructions. This has come out of the Royal Institute of Chartered Surveyors, where the graph is basically showing the downward trend line of the number of landlords and the number of properties available for rent. And it's a downward trajectory, which backs up the data I shared with you last year from the estate agents, who were saying they were seeing more landlords selling than they were seeing buying. So that is the trend line. So my forecast for you guys is rents are going to continue to rise over the next 3 years. Inflation will fall, but it will be slow and it will stop at 3.5%. Interest rates will fall, but that will stop around 3.5%, December 2027. Prices of properties are going to keep rising during that time, and it will see a sharp upward trend, probably from 12 months out. Why do we see a sharp upward trend? Because wages have been rising at a rate greater than inflation. When wages rise greater than inflation, affordability starts to kick back in for the home buyer market. We also have interest rates dropping, which will encourage the home buyer market to kick in. We also have new build down. Developers have stopped building, so all of these are going to feed into good times for landlord investors, and we're going to see sharp rises in house prices. So that is my predictions for the next 3 years going forwards. Now, because I've done these predictions for you to help you navigate your businesses.
The Baker Street Property Meet is the UK's largest and #1 property investors networking event. The property market is going through monumental change right now, and at Baker Street Property Meet we aim to keep you up to date with the latest tips and tricks and insider tactics to help you keep on top of your property investing game and succeed in these troubled economic times. The Baker Street Property Meet is fundamentally about networking, because it's not what you know, it's who you know. And at Baker Street we aim to connect you with the people to make your property journey a monumental success. There's no better place to be to further your property investment journey than the Baker Street Property Meet. So make sure you're here, you're connecting with myself and Andrew Roberts, our expert guest speakers, and 300 passionate property people each and every month. See you at the next meet. Get your spot at bakerstreetpropertymeet.com.